Okay, picture this. Things seem pretty steady on Wall Street, maybe even looking up a bit. And then boom, one single company really sends a major index for a loop.
Yeah.
That's kind of the story we're digging into today in our deep dive. We're focused on a pretty notable move in the stock market, specifically a recent dip in the Dow Jones Industrial Average.
Hmm.
We've got some news articles here giving us a good look at what went down, and they all seem to point towards one company having a really outsized impact.
Right.
So our mission today, figure out the real reasons the Dow slipped and what that signals, especially the huge role played by UnitedHealth Group.
UNH, yeah.
This should give us some hopefully sharp insights into how these market dynamics work and just how interconnected everything
We'll
is.
set it up perfectly. And
Yeah.
what jumps right out from these sources is that disconnect.
Yeah,
The broader market, like the S&P 500, actually edged up a bit.
right.
But the Dow, it took a clear step back.
Yeah.
So that immediately tells you something pretty specific and impactful was happening with one or more of those 30 big Dow companies.
Right. Exactly. The reports confirm it. The Dow fell on Thursday about, what was it, around 1.02%.
Yeah, about that.
But here's the really interesting bit. That drop happened even though a lot of the other stocks in the Dow were actually up. It's kind of like seeing most people on a boat rowing hard, but one massive weight is pulling the whole thing down anyway.
That's a really good way to put it. And that massive weight, it's impossible to miss. It's UnitedHealth Group.
Yeah.
UNH, this healthcare giant saw its stock price just plummet.
Yeah.
We're talking around 23%.
Wow.
And just that one company's dive had this huge disproportionate pull on the whole Dow Jones average.
Right.
So this really highlights a key thing about the Dow. Its movements can be swayed, sometimes dramatically, by just a few companies with high share prices. It can give a different picture than the S&P 500 sometimes.
Okay, let's really get into this UNH situation then.
Yeah.
What caused such a massive slide? Because 23%, that's not just a stumble, that's falling down the stairs.
Yeah, definitely. The sources point to a couple of things, really, both tied to their latest earnings report. First up, their Q1 earnings, they just didn't quite hit what Wall Street was hoping for.
Okay.
Adjusted earnings per share were $7.20, but analysts expected more, like $7.29. And revenue, $109.6 billion, also missed the $111.6 billion target.
So a miss on both the top and bottom lines. That alone can make investors a bit nervous, obviously.
Sure.
But the reports seem to suggest the bigger worry was about the future, right? Their forecast.
Exactly right. That seemed to be the real gut punch. UnitedHealth significantly lowered its earnings per share guidance for 2025.
How much lower?
The new range is $26 to $26.50 per share. That's way down from their previous forecast of $29.50 to $30.
Wow, okay. That's a big cut. No wonder the market reacted like that. That sends up some serious warning glares about their business outlook.
Huge red flags for investors, yeah. And just to add some context here, this wasn't just any bad day for UNH.
No.
Sources say this was their biggest single-day percentage drop in like over 20 years, since August 1998, actually.
Yeah. Since 1998. Okay, that really puts it in perspective. This was a major event for them.
Absolutely. And they did give reasons for cutting that guidance so sharply.
What did they say?
They talked about heightened care activity indications in their Medicare Advantage business. Basically, more people using doctor and outpatient services than they'd planned for.
Which costs them more money.
Exactly. Higher payouts. And on top of that, they mentioned the greater than expected impact of ongoing Medicare funding reductions. These were changes made under the Biden administration.
Okay, so it's like a double whammy, costs going up because people are using more health care, and the money coming in from Medicare for those services is less than expected?
Precisely. Squeezing margins from both sides.
Okay, so UNH gets hammered and it drags the Dow down. But what about the rest of the market? How did other stocks, other sectors react?
Well, like we said, the S&P 500 actually finished slightly positive, so the negativity was pretty contained.
Right.
Now, the SPDR Dow Jones ETF, ticker DIA, which just tracks the Dow index, well, naturally, it went down too. It's expected.
Sure.
Interestingly, though, the analyst consensus rating for that ETF, DIA, is still apparently a moderate buy.
Moderate buy. So even with this big drop driven by UNH, analysts, on balance, still think the Dow components overall have more upside potential.
That seems to be the takeaway, yeah, looking longer term. Now, within healthcare itself, there was a ripple effect.
Okay.
Other big insurers like CVS Health, Elevance Health, Humana, their stocks fell too.
Sympathy pains, basically. Worries they might face the same Medicare Advantage pressures.
You got it. Bad news for one major player often makes investors nervous about the whole peer group.
Makes sense. But you mentioned the S&P was up, so other parts of the market must have been doing pretty well that day.
Oh, definitely. That contrast is important. Several sectors had strong gains, actually. Tech, consumer defensive stocks, financials, industrials, communication services, they were all looking pretty good.
And even within the Dow itself, aside from UNH.
Yeah, even within the Dow, there were some big names pulling in the opposite direction, helping to offset some of the UNH drag. We saw gains from companies like Home Depot, Goldman Sachs, Procter & Gamble, J&J, Merck,
Okay.
Boeing, Disney, Chevron too. So lots of green elsewhere.
So really a mixed bag. It just shows how concentrated that UNH impact was.
Exactly. Though the sources also mentioned NVIDIA and Amgen contributed a bit to the Dow's decline too. NVIDIA had its own issues with a probe related to China exports.
Right, okay. So a few specific negative stories hitting at once, but UNH was clearly the main event for the Dow. It sounds like investors might have been hoping for better news from them, maybe after the last quarter wasn't great either.
That's a reasonable take.
Yeah.
Yeah, there was probably some hope UNH would show signs of turning a corner. And it's worth remembering, before this big drop, UNH stock had actually been outperforming both the S&P 500 and the Dow year to date.
Oh, interesting. So it had been doing well until this point.
Yeah. And there was even this narrative floating around for a while, that UNH and its peers were kind of appealing as tariff-proof investments.
How so?
Because their business is almost entirely domestic, U.S. healthcare. So worries about international trade wars didn't really touch them directly.
Huh. That's an interesting angle I hadn't considered. And wasn't there some positive news recently, too, about Medicare rates? That might have boosted hopes?
Exactly. Just recently, CBS and Humana got a nice little stock bump because the Trump administration announced significantly higher Medicare reimbursement rates for 2026.
Okay, wait. Trump administration or Biden? The source mentioned Biden earlier regarding reductions. Let's stick to what the sources clearly state about the timing and administration for the rate changes.
You're right. Let me double check that detail on the sources. Okay, yes, apologies. The source mentions the recent positive news was related to the upcoming 2026 rates, which were seen favorably. The earlier mention of funding reductions was linked to changes enacted during the Biden administration that are impacting them now and contributing to the lower 2025 guidance. Good catch.
Okay, got it. So there was some positive news about future rates for 2026.
Right, which was seen as a potential boost to margins down the road.
But that positive outlook for 2026 contrasts sharply with the tough 2025 picture UNH just painted.
Exactly. It really highlights the push and pull in this sector right now. Near-term pain, maybe, but potential for longer-term recovery.
And it sounds like analysts are seeing that near-term challenge pretty clearly.
Yeah, one analyst quoted Daniel Barasa from Gabelli Funds, basically said, this UNH report is a negative signal for all the Medicare Advantage insurers in the short run. The thinking is, while those higher 2026 rates should eventually help margins, 2025 looks like it's going to be a difficult year for these companies.
Okay, so we've got a good handle on UNH and the ripple effects. But let's circle back to that point you made earlier, the disconnect between the Dow falling and the S&P 500 actually going up a bit. Why is that unusual, and why did it happen here?
Right. It's pretty unusual because usually the Dow and the S&P 500, they tend to move more or less in the same direction on most days.
Yeah.
Not always perfectly in sync, but generally tracking each other.
Okay.
This divergence really shines a spotlight on how these indexes are built differently. The Dow Jones is, well, it's kind of old school. It's a price-weighted index.
Price-weighted. What does that mean exactly?
It means companies with higher stock prices per share have a bigger influence on the index's movement. It doesn't matter how big the company's total value is, just the price of one share.
Ah, okay. And the S&P 500.
The S&P 500 is market cap weighted, market capitalization. So a company's influence on the index depends on its total market value, basically. Its share price times the number of shares outstanding.
Yeah.
Bigger companies move the needle more.
So because UNH has a relatively high price per share, even though it's just one of 30 stocks, its huge 23% drop had a much bigger negative impact on the Dow calculation than it did on the S&P 500 calculation.
Exactly. Spot on. In the S&P 500, UNH is still a big company, but its drop gets diluted among 499 other stocks, weighted by its overall size. In the Dow, its high price tag gives its drop extra punch.
So one single stock really can have a much bigger say in the Dow's direction compared to the S&P 500.
Precisely. That fundamental difference in weighting is why we saw this somewhat rare split with the Dow down and the S&P up. It just shows these indexes give you slightly different views of what the market's doing.
Okay, so wrapping this all up then. The big story is UnitedHealth's really disappointing earnings report and, maybe more importantly, that significant cut to their future earnings forecast. That triggered a massive sell-off in UNH stock. And because the Dow was price-weighted, that single stock's plunge had an oversized negative impact, pulling the whole index down. Even while many other stocks, including some big names in the Dow itself, and the broader market represented by the S&P 500, were actually doing okay or even gaining.
That sums it up well. And the core reasons for UNH's troubles seem to be that higher healthcare use and Medicare Advantage combined with those Medicare funding adjustments pinching their profits.
Right. And those issues are clearly making investors worried about competitors in the insurance space, too.
Seems that way, yes. It highlights the connections, but also those index quirks.
So, as we finish this deep dive, it really leaves you thinking, doesn't it? With all the complexity in healthcare economics and these different ways indexes like the Dow and S&P are built, how should we really interpret these single-day market swings?
Yeah, it's a good question.
What does a day like this tell us about needing to look past the headline number and understand the mechanics underneath? And maybe what does it imply for how we think about diversifying our own portfolios and managing risk when you see such different signals from different parts of the market? Definitely gives you something to chew on about how all these different forces can hit various market segments so uniquely.